This presentation will have two parts. The first part, I'm going to go over some macro issues, and the main message there is to argue that the resource juniors are going to play an increasingly important role in supplying the world's future physical needs. We're seeing a major pullback from the conceptual and digital market world. The physical isn't quite here yet for us juniors, but it is coming. In the second part, I will be demonstrating the 5 companies in my session Amara presented in Eric Coffin's session earlier today, and I'll show how I see their stories and what I think the key parts are. And the whole purpose is to educate everybody on how to think about these resource juniors. And most of you here are not Gen Z or millennials, so you probably are familiar with this space already, but it's becoming really important to prepare to educate a younger audience as it discovers this sector. So this graphic here is basically a comparison starting in 1920 and 2010, comparing the Dow today and after. And you can see there was a strong parallel with the roaring 20s and the whole past quantitative easing decade. And then we had violent crashes, and both of them had rebounds, and ours has gone a lot longer. Now the S&P and the NASDAQ indices, they're down a little bit worse. But this is what followed in the 30s depression, and what's haunting everybody, why they're blasting out the resource juniors too, along with all these other things that were overpriced, is there is now a fear growing that there will be a serious global recession as they try to crush inflation by raising the interest rates to levels where they used to be. So here you can see sort of the ugly charts of last year's heroes. The crypto stocks are tanking. Bitcoin itself is flirting with a return to considerably lower levels. And the weed story is pretty much over. It's now, how much money are you actually making as a, basically an agricultural product with the special benefits that come with it. And perhaps what I think is the metaphor is Tesla. I'm talking about Lithium Mania 2.0 coming to being driven by resource juniors. And the bet is very simple. Either this happens and a lot more lithium gets mobilized in the next 5 to 10 years, or the EV dreams of replacing internal combustion engine cars by 2035 is toast. And that means Tesla, which has a winner-take-all pricing, is also toast. So in a way, you can treat the survival of Tesla, link it to the emergence of the resource juniors as a major mine finding and development force. This is my chart where I track the relative percentage of venture traded value. Most of the time, non-resource stocks have dominated. We had that brief window in 2020 when gold ran through 2,000 where the resource juniors gained the upper hand, but they've lagged most of the time until mid-December, and things changed. So the resource juniors, even though the value total traded hasn't gone up, that's because it's been a pretty ugly first part of the year, they now have the upper hand in terms of traded value. Now, when you're looking at your portfolios, you wouldn't think anything special is happening, but there is a transition underway now, and it will become more explicit as this year unfolds. So this tracks the relative percentage of GDP between China and the United States. And now the IMF's already predicting that they're almost going to be equal by 2027. This remains the biggest geopolitical problem out there. Globalization is turning into a train wreck. The idea that China would eventually become a democracy is wrong. It's now cemented itself as an autocracy, and it's forged an alliance with Russia against the West and whatever democracies remain in the West. And that is now the biggest concern for everybody, and also the basis for what's going to happen next. Now, most of what I'm talking about today is going to be about other metals that are used for things. Gold's not used for anything. But gold is still important because in this big, great power battle that's coming, the US dollar will not survive as the single reserve currency. So gold is the natural place to go to not Bitcoin, because Bitcoin is nothing but a digital piece of imagination that's priced in US dollars, so that's not particularly useful. This chart shows the percent of all the gold that's been held by central banks. And this is misleading because you think that the central banks have been slowly getting rid of gold, that it's not very important. But this chart is very important. These are China's official reported central bank holdings, and they stopped in 2015. Yet they are the biggest gold producer in the world. This is what they've produced. There is an unexplained 180 million ounces. Where did it go? They actually import gold for the jewelry business, so it's not like they're unloading it on the Chinese citizens. I don't think they blew it out into the London market and had gold bugs and that buy it. I think these other state-owned entities, and you have to understand China now as this beast of, there's the central command economy, the ones that are 100% owned, and then the ones that are partly owned. They are all one giant corporation competing against all the other corporations in the world. And China, I believe, has been secretly stashing gold, but allowing this other image to look tame so that there's nothing important. But somewhere along the way, when push comes to shove, it'll turn out that America and China probably have equal gold reserves. So I think the world's heading to a breakup. I've used this chart for 10 years plus. I see China eventually dominating all of Australasia. Australia may not survive as a member of the West. And of course, what we saw this year with Putin and Russia invading the Ukraine, it's now clear that Russia has ambitions to control that entire European, North African arena. And so that leaves United States, Canada, everybody else to be in this sort of North-South America zone. And I think as the deglobalization process breaks down into autocracy versus democracy, we may not see goods go back and forth the way they used to. And that is a huge problem for the United States, because this is what the Russia-China alliance controls of global metal and key energy supplies. This presentation will be available online. 19 of these, they control over 40% together. And then there's another 10 where they control between 20 and 40%. And China and Russia's economies combined are just a little bit less than America's economy. And here is what America supplies of all these metals. And this is a big problem. They've been muttering about it with their critical minerals talks and things like that. But the NIMBY crowd is still has the upper hand in keeping rules very difficult to get anything permitted. The wake-up call about the quandary the United States has put itself in by outsourcing everything in this, with this concept of just-in-time globalized trade. This is going to bite, and it's going to bite very soon. So where's all this extra metal supposed to come from that can't come from China or Russia anymore? Well, the major mining companies, they are interested in very big deposits. But big deposits are hard to find these days, and they take a very long time to develop. And when you find something like Resolution in Arizona, you still run into all these obstacles to get it into production. So the future physical supply is going to have to come from small to medium-sized mines in jurisdictions that are reasonably safe, obviously Canada and the United States, and maybe a good part of Latin America. And the juniors are really good at finding and advancing small to medium-sized deposits. The big guys, they're happy now to let the supply deficits emerge, see high metal prices, collect the big margin, pay out dividends, because the mining industry sees itself as a mature sunset industry that has no future, which of course has been partly created by this relentless bashing of mining as something dirty and unnecessary. And now you have this whole metaverse concept of, well, you don't need anything physical for it. Well, the wake-up call is coming. Now, lithium is a very good example to sort of as a metaphor for what's going on. So this is the lithium supply over the past over the past century, and you see it taking off here. And this was the first lithium mania 1.0 that then stalled when lithium prices crashed. This is what groups like Rio Tinto and that are saying we need if the EV rollout is to become reality. We're talking about going from 100,000 tons of lithium metal now to almost 1 million tons a year by 2035. That's incredible. Rio Tinto made a great discovery at Jadar in Siberia, but they say we need 60 of those to make this a reality. And their Jadar is now stranded because of corrupt politics and NIMBYism. Now, I saw a quote the other day, some NIMBY organization saying, forget lithium mining. I mean, the United States and North Carolina has all these pegmatite deposits there, but they have a hard time developing them because not in my backyard. And so these green type groups are saying, oh, you should just focus on recycling. Well, here's how recycling is going to work. This was all glassware usage. You're not going to recycle glass to get back the lithium and glassware. This is the cell phones and laptops coming into play. And I don't know to what extent that's been recycled already. Probably not going to make a big difference. And this is the recent sort of Tesla EV explosion. And the total, all ever mined, is 1 million tons of lithium. And by 2035, we're supposed to be putting million tons of lithium into lithium ion cells and selling all these electric vehicles. So the stuff that's being sold now won't be available for recycling until a decade from now. And this just shows you how intellectually impoverished so many of these people are who oppose mining as something that we should simply do without and just recycle. So where's the lithium going to come from? Well, most of the work's been done in the brines, and that has limits as to how much you can get out of these salars with the recharge cycles and the water issues. Australia has been the champion that has come out of nowhere with its pegmatite fields. And these two areas, Brazil and North America, Canada in particular, that's where the future is going to come from. And these pegmatite deposits, there are a few like Greenbushes, 150, 200 million tons of 2.5% lithium oxide. I don't think we might find a few more of them, but even a few more of those are not going to solve the problem. It's going to come from many such deposits. And in places like Canada, it's under moss, it's under gravel, it's under swamp, it's under bush. It has not really been looked for because the demand has never really been there for lithium. And what there was for glassware type, which is only the special petalite, not the spodumene type, is useful. So everybody's been gaga about the $36 a pound lithium price. That's 10 times what it was 2 years ago at the start of 2020. And at $3 a pound, nothing works. All those pegmatites are dead. They're not going to be anything. So the sweet spot's going to be somewhere in here between $10 and $20. If you get $20, $40 as the long-term price, well, the problem with that, look what kind of market becomes bigger than aluminum as a total market. Not going to happen. Also, nobody's going to be able to afford an electric vehicle if lithium's that high. So even though the price is going to go down, that's actually a good thing, so long as it stops at $10 and bounces between 10 and 20. That's the foundation for a 3 to 5 year bull market in hunting these pegmatites and advancing them and making sure that the EV dream doesn't die for lack of lithium. And by the way, these projections for demand, they don't even take into account the possibility that a solid-state electrolyte will emerge that allows lithium metal to substitute for graphite in the anode. That makes the best electric car battery imaginable, and if that happens, then your demand goes even crazier through the roof. So, the two things that are missing in this sector are knowledge. The sector doesn't know how to quantify the size of the prize, and I've devoted presentations to this model in the past, discounted cash flow model, and I've developed the tools to do this to see if you do find something, what is it worth at the end of the day, and what if you don't have to undergo more dilution, what sort of stock price appreciation you can get. Because resource stocks are not like winner-take-all Googles and technology stocks. They all have a finite limit. They're going to have a resource. It's going to have a 10 to 20-year mine life. There's a way of valuing it. Most people don't understand it. We have to make a major effort to get people's head around the valuation model. But this is what I'm really today is about. I spend a lot of time extracting the stories from these companies that I flagged as bottom fish spec value rated, and it's actually hard work. And after doing this, after I came up with 175 bottom fish at the end of last year, I said, okay, now I need to categorize them, and I came up with this template for all the different story types. And so I've created this as a tool both for you to take, and if you go to a company, you ask them, help me plot the path that your story fits into, and what are your strategies for success? What are you doing differently than what others did that is going to have you be successful when they weren't? So the companies need to be able to articulate their story like that, show their stuff so that when you engage with them, you're immediately getting into the nitty-gritty of why will what you're doing make the company succeed. So the first company in this batch here is P2 Gold, and you can see the stock price. It's gotten cheap again. And it has two projects. It has the GABS, which is a copper gold existing system, and it has BAM, which is an exploration play. And you can see that GABS has gone through all this. It's never really developed. These guys have consolidated it, and now they're doing a system rethink, feasibility demonstration, and they want to take advantage of the higher real prices and even treat it as an optionality bet on even higher prices coming down the road. And there you just have a snapshot. It's in Nevada, so it's not in some bizarre place. 3 deposits like that with a resource estimate. And what I've done is an outcome visualization. So I don't know what their PEA is going to look like. They're going to have it done by the end of the year. But what's it going to look like? So I used simple life of mine averages, and the outcome was not very good because the after-tax NPV of 282,000 US is lower than my projected CapEx, and that's a clear hurdle. CapEx should be equal or lower than the after-tax net present value. IRR is okay, it needs to be 15% or higher. So what is this company going to do to fix that? Well, the innovation that they're bringing to this story, here's a graphical presentation of it. So even if you ignore the fact that it might not be pushed through the development cycle, if you don't have further dilution, you see a stock price like 376. So it's important to come up with a number. The resource stock's not going to go to the moon. They can't by very nature of what a mine, a deposit, is all about. So what they're doing is they're going to do optimization of ore schedule. Some of it's oxide, some of it's sulfide. They're going to mine the oxide first, and they're going to show that when you don't use some average life of mine thing like that, when you use engineering, you can make this a big worth more than what I have there. So that's what we're waiting to see, what they come up with by the end of this year. But there's something else to that project. This is something that Robert Friedland found in 2003. This was what, this is what he bought from, through Ivanhoe, bought from BHP, marginal copper deposit at surface, open pitable, didn't work at 60, 80 cents in 2000, but Robert had a vision about where the China super cycle was coming from. BHP didn't have that vision until 2006. As soon as they vested, they went and in 2003, they drilled a deep hole on a deep IP target, and this became the Hugo Dummett zone. Grades of copper and gold several times what BHP sold. And here's that part of that life cycle. It's now called Turquoise Rip Hill, of right in here, taking off, and you get sort of a 10-bagger as a result of finding something bigger and better at depth within an existing system that by itself didn't look that great at the time, though eventually where copper went, it did. And this is what they have here in the middle, an IP anomaly. So that's the blue sky you get in addition to this feasibility demonstration story. Some plays have several story paths embedded in them, and this is an example of one. BAM is a more traditional exploration play in the Golden Triangle. It's had some work done in the past 30, 40 years, little high-grade copper, gold stuff, never really hung together. And it took, when Ken and Joe took on this project, they said, you know, this is peripheral to something potentially big that's going on. And things like a barren, young basalt cover aren't very helpful, too, for seeing what's going on down here. So they did drilling last year, which confirmed that this upper part has decent gold mineralization. The question is, as you go down into the sweet spot where the structure is inferred, the contact between the sediments and the older batholith to the east, there is this Galore Creek-type porphyry intrusion feeding all this. Now, it's not going to be an open pit mine. It's going to be an underground mine. And so they are going to do an 8,000-meter drill program that could deliver a discovery that blows away what they're hoping to accomplish with the GABS feasibility demonstration. Amara Minerals. It's been one of my sort of picks forever, and I think its time is finally here. Its story is a major mining district that had a mine that was depleted, shut down, and the exploration around sounding area was never taken to completion. After Kinross couldn't get it permitted, they went for like 675 drill pads and 900 holes, and they hit the wall with the U.S. Forest Service. They just dropped everything and walk away. Amara has restaked this entire land package and is basically doing a rethink of the data. They were able to purchase the data set from Kinross for just an NSR, and they are going to go in there now, and they've done additional data gathering. They're going to go in there. They've got 3 target areas with 8 targets in each, and they're going to go in there and try and find another Buckhorn mine, which was 1.3 million ounces. It was Kinross's most profitable acquisition ever in its entire history. And the Republic Toronto Graben has not seen anywhere near the work of this area, which is where they have been focused for the past 6-7 years. So this is an entire new story, and they're trying to prove that there are going to be multiple such 3.5 million ton deposits of 12 to 15 gram gold. And here are what I've done. So I've done an outcome visualization for it, similar as I did with P2 Gold. What would Buckhorn 1.0 be worth today if found and they could use the Kettle River Mill? That's $1 billion Canadian. If they don't have to undergo any further dilution, you have this 4 or 5 cent stock going up 100 times to $4. And because everybody knows what this stuff's supposed to look like, you've got a lot of context in place for people to understand it when they hit that zone and say, oh boy, we've got another Buckhorn on the line. And Vanstar, this is an interesting company because they found the Nelligan deposit in this period, auctioned it to Iamgold, which finally delivered a resource estimate here, and they're carried with a 20% interest, I think, to production. So this is an old-fashioned type of thing in the Chibougamau area where they found an entirely new type of deposit for that area. So it's now in this question, when does it go from this delineation stage into like economic studies? And that's sort of the holdup with this company, which is why the stock is cheap. We don't know when Iamgold is going to finish the delineation and start doing PEAs and that to push it forward into production. And again, I've done an outcome visualization for a similar type of mine, which shows that that would be about 1.1 billion Canadian. And in this case, Vanstar doesn't have any further dilution, so it could actually get that 346 price. And then, but because waiting for Iamgold to do something is not very fun, they managed to get a deal from Iamgold to farm up to 75% in the Bousquet Oneto, which is near the Westwood Doyen area. They had tried to find some open pitable, only got a couple of 100,000 ounces. It wasn't enough to bother developing and feeding their underutilized Westwood mill. So they farmed it out to these guys, and they're using this strategy that's very popular in this area, which is to go deeper, chase this down deeper. Iamgold already killed the open pitable near surface stuff, but maybe this blossoms at depth, better grade, better thicknesses, sort of what happened with Amex Exploration and its Perron project. Searchlight Resources. You can see I've been a fan of this for a little while. It's got two projects going, two major projects at the moment. The one they're focused on now is Bootleg Lake. This was a little rare earth system found in Saskatchewan ages ago, and it's high grade, but it didn't hang together, or nobody bothered to, because the 60s, 70s when it was found, you know, Mountain Pass ruled everything in the world, and then Baia Noble came along, so who cares? But what they did is they acquired this land package and did a new type of geophysical survey, a radiometric survey that gets better resolution. And what this did, it revealed this thorium anomaly. This is the original showing, 3 times. So there's a lot more going on. But the biggest surprise is, because they staked this whole trend, was a uranium anomaly that's 2 kilometers long that nobody had any idea was there. So now they're going to go in there in the field this year, do all the prospecting and mapping, sampling, and trenching if they can, to prepare targets for drilling in Q1. And this could be an open pitable, bulk mineable uranium deposit. And with the rare earth, it's a question of, will it hang together sufficiently to be worth mining, and what will the average grade be? But the bigger story is Wollaston Domain. This has been sort of an also-ran. They explored everything in this area when the uranium boom was underway in the 60s and 70s. But once they started finding the high-grade Athabasca deposits, everybody forgot about everything else. And the Wollaston Domain is this also-ran, which has the potential to be rethought in terms of modern exploration methods. And if they can turn that Bootleg Lake uranium target into a deposit, you blow up this much bigger area of northern Saskatchewan for exploration for uranium and potentially for rare earths. And the other thing we'll skip that. The other one they have is Bootleg Lake. They've been, for the past few years, consolidating all these little claims on the Saskatchewan side of Flin Flon, which is famous for its massive sulfide copper mines. But there was also this tiny little gold camp going on, chasing orogenic veins. They're slowly, carefully consolidating all the land claims for the point where then, okay, we have this all, we're going to drill deeper, we're going to go beyond the little sort of chicken pecking scratches that the previous guys did, and show that there's a lot more to this little gold district in the shadow of the giant copper district. And there you can see sort of how they're slowly stitching this all together, whereas here's the big copper mines. And then the final one in this batch is Zephyr Minerals. And I had Zephyr here a couple years ago in January. They had a great play in all Colorado. It was a high stakes, Broken Hills type silver, lead, zinc play. And they drilled, and it wasn't there, and the stock crashed and burned. This is the bad thing that happens when you have a high stakes hole. Now they're doing something completely different. Thanks to the experience of Lauren Camperdo with going into Vietnam when it opened up after the Soviet Union collapsed, they've gone into Zimbabwe. And Zimbabwe has been a basket case country ever since it became an independent nation and went under the thumb of Robert Mugabe, the dictator. Well, he died or got kicked out in 2017, died in 2019, and Zimbabwe is finally trying to enter the 21st century. What makes Zimbabwe interesting? Well, they produce average 400,000 ounces of gold per year for the past 100 years, mainly from small-scale artisanal workings in these greenstone belts. That's all these green things with little red dots. It's all over the place. This has never had a chance for modern exploration where you do a malartic bulk tonnage type system, create a big open pit, put modern economies of scale to work. There's been a few that have produced 300, 500,000 ounces a year over the past century, but this is a frontier opening up because they changed the rule to allow 100% ownership by foreign companies. And that was not possible in the last 30 years. So this third world exploration frontier, which opened up in the 90s for most of the countries in the world, this was out of bounds because of the dysfunctional politics. And so they're now in there making applications, assembling stuff. They're an early bird. There's still a risk the country could backslide and go back to dysfunctional politics. But that's why this is so cheap at the moment. This is sort of early bird bottom fish type example. And there you can see you don't need much to justify the fair value of this. I have a way of also showing what outcome you need. That's a pretty modest outcome for a stock to go from 14 cents to $7, $8. So that's again an example of quantifying the size of the prize and seeing how feasible it is. Anyways, this is a graphic that troubles me a lot because I see us caught between an end-timer mentality where we just accept there's going to be nuclear bombs, there's going to be hunger, famine, everything is going to crash and burn. There are some religions which actually look forward to that, but the younger generations don't, especially this group. It's going to be interesting to see what happens to this group, the oldest one of which is only 24 right now, as they become a force in deciding how things happen. So you can download this. I have a link on the homepage. If you want to get more of those, just print that out. It's still $4.50 a year, gives you access to everything. And I've got a new show called Kaiser Watch, which replaces Discovery Watch. It's I publish a tweet or a blog, which I tweet. It's on the audio thing is on YouTube itself. And even if you don't want to subscribe, follow me on Twitter so that you know when I've posted one of these, and watch my coverage of everything. Thank you very much.